Google has a moat that other companies are drooling over, and they're trying to attack their moat and take market share away from Google in some key areas. See, advertisement revenue is Google's main income source, and the thing with ad revenue is that it is a high profit margin business. Being that Google is such a huge and popular search business with a large user base and extensive reach, they can command charging high prices for ads. It's just how it works. Advertisers are going to go where the most traffic is and be willing to pay premium for that. The beauty of advertisement revenue is Google does not have to put in much effort and resources in for this and gets to make those high profit margins off of it. I mean, think of Tesla. They sell cars. To sell that car, it requires a lot of expenses. You need the production facility, the materials, the labor, the delivery costs, on and on and on. By the time Tesla sells a car, so much work has gone into producing that car that they make much smaller profit margins on their product versus Google that says, okay, who wants to advertise with us? All right, you do? Well, here's the cost, here's the package, and it requires little effort to roll out and manage it from Google's end. There's much smaller expenses associated with placing advertisements on their platforms than making a car. That is why it's so highly sought after. I mean, Walmart just bought VIZIO TVs. Why? It's not to make money off of selling TVs, it's to gather consumer data to run targeted advertisements on those TVs and in stores to make sweet, sweet advertisement revenue. It's the ultimate form of revenue, especially if you have access to consumers' behavior. It's a gold mine. So we have three main areas where Google's moat is being attacked by other large companies. We have Google Search, YouTube, and AI. I'm also going to talk a little bit about their cloud business. So let's start with combining Google Search and AI because they kind of go together, and the company attacking Google and trying to take away market share here is Microsoft with their Bing offering integrated with OpenAI. Now Google has the world's two largest search engines, Google Search and YouTube. You'll see here that Google and the search and the YouTube component combined make up 91.62 of the search engine market share worldwide, where Bing makes up a very small 3.31%. So Microsoft last year went all in to, quote, go after the 800-pound gorilla in the room. That's what Microsoft CEO Satya Nadella said about trying to make Bing the go-to search engine, meaning he knows just how powerful and wide moat Google search is and how difficult it will be to take any meaningful market share away from them. So we have Microsoft trying to have Bing take away market share from Google search, and so far it's not been very successful. As we saw, Bing's market share is tiny at 3.31%. I think since announcing the relaunch of Bing integrated with AI and pushing it out as hard as they can has barely gained them any market share growth. Maybe 0.1 to 0.3% growth so far from what I have researched. This could change, of course, but I think we see the stickiness of Google with its search engines. I will say this though, I really did. I tried to convert, and I know some friends that did, over to Bing, but I just find myself going right back to Google. It is what I know and can more easily navigate through, and obviously I'm not the only one. So in this area, Google is proving so far their wide moat in Google search remains strong and is not really being impacted at all by Microsoft's targeted strategy to dethrone them in any way. We will see how this develops over the next 1 to 5 years, but I have high confidence that if Microsoft's big rollout effort barely made a scratch in Google's moat, I can be pretty confident it will stay that way, but Google better not sleep on Microsoft either, because any weakness, they will pounce on the opportunity. Google has everything to lose here, not Microsoft. So Google's search moat is safe in my opinion, and it is a wide moat. Now briefly, AI. Microsoft's AI is off to a strong start, where Google's previously AI product Bard, now called Gemini, thank God they changed the name, had a very rocky start and is still struggling due to inaccurate data, failed demos, and fake demos. Most people I know use OpenAI. In fact, I do not know one person that says they use Gemini. So Microsoft has a head start, but I think that Gemini will be a fierce competitor with Google's user reach. Which brings me to some breaking news. Apple and Google are partnering up on AI. So Apple is in talks to let Google Gemini power iPhone AI features. This is huge. This shows Google's wide moat and how Apple is attracted to their reach and offerings. Now, disclaimer, Apple also reportedly is in talks with OpenAI, but it seems Google would be the likely winner as it is already the default search engine on Apple iPhones. So naturally, they would want to go with Gemini to work in tandem with Google Search. Of course, the partnership between Apple and Google is under attack by regulators, so it's possible that Microsoft could possibly take it if regulators have their way. So regarding Google's AI moat, it does have some weaknesses, but I know it will be successful. It just depends on how much they can ward off OpenAI, and if this deal with Apple works out, then they have a pretty clear path to growth and success. This will be one I will be watching very closely, and you should too if you're a Google or Apple investor for that matter. Now on to YouTube. This is being attacked. YouTube right now has no real competitor, so Elon Musk's X, not like his ex-girlfriend, but the company X that was previously Twitter, is launching a television app for Amazon and Samsung smart TVs. This video platform supposedly looks identical to YouTube's TV app. Elon Musk is trying to attract more influencers and advertisers. The billionaire owner of X has also urged content creators to migrate their entire video content to X, asserting that they stand to benefit from enhanced ad revenue streams. So this has yet to test YouTube as it is still barely getting off the ground, but I have a similar outlook with Bing to Google Search. YouTube has already cemented itself as the go-to video platform for consumers. You and I, along with millions of others, already have established our footing with YouTube. We follow content creators that we like, we are familiar with YouTube's layout, and I see it as highly unlikely that many of us would switch. In fact, I put out this survey and asked you guys if you think that X could take away any market share from YouTube or a substantial amount, and the majority of you, 73%, said no, while 27% said yes. So I agree with the 73% of you that X's new video platform will not take market share away from YouTube. I predict that YouTube will remain dominant as viewers and content creators already have their habits and set up and solidified with YouTube. You never know what Elon Musk has under his sleeve though, but like TikTok failing to hurt Meta and Instagram, Meta's user base has been continuously growing, and that's with TikTok being successful. I see a similar situation and highly doubt X will dethrone YouTube. So Google's moat proves to be solid and resilient and wide here too. So let's do a quick recap. Google's moat with Google Search and YouTube to me are extremely wide and impenetrable. Their AI moat is medium right now due to the competition of OpenAI, but if this massive agreement with Apple goes through, then they will build a wide moat with Gemini as their user reach would be huge. So now I have to talk about cloud real quick. Google is in third place behind Microsoft's Azure and Amazon's AWS. I think they remain in third place, which is good, but it's not ideal. So it will be an important part of their business and revenue generation, but it won't be wide moat nor bring in the revenue that its Google Search brings in. Let's take a look at their different revenue streams. You will see here that the lion's share of revenue comes from Google Search, a massive $48 billion. Then you have YouTube ads at $9.2 billion, Google subscriptions at $10.8 billion, and Google Cloud at just below $9.2 billion. So again, I think cloud will remain important, but not a wide moat business that's going to take over Google Search and be their, bread and butter of bringing in revenue. So now that we saw that, let's briefly talk about financials. Now, Google reports their next earnings on April 23rd, so be sure to put that in your calendar. So we're going to look at the most recent earnings as of 12/31/2023. If we look at their free cash flows, by the way, I just created these charts. Let me know if you like them. I wanted to create something that I feel is easy to read and gives you the most important data and information of each company that I go over in my videos, so you'll be seeing these more regularly. Now with cash flows, this is in the billions of dollars. We'll see that over the last 8 quarters, so 2 years worth of data, we see a little bit of a dip, but a swing up, and then a recent dip from last quarter, 3Q23 to 4Q23. But regardless, their free cash flows came in at a massive $70 billion. And what I like to compare is year-over-year data. That's what's important because each company has their own seasonality, shall we say, of income and revenue based on consumers' buying habits, maybe the holidays, et cetera, et cetera. So with Google, if we look at 4Q23 versus 4Q22, they increased their free cash flows by $10 billion from 60 billion up to 70 billion. So again, free cash flows, this is towards the high end. I mean, not a lot of companies bring in this much free cash flows. It's impressive. Now with revenue, we see over time, revenue is just going on this steady increase and came in at about $86 billion in the most recent quarterly earnings. So some positives here with revenue. We saw some positives with free cash flow. Despite that dip in the last quarter, it's up year over year. Now, if we look at long-term debt, man, it's going down. This looks like kind of a slide or a roller coaster going down. This is what I like to see, as well as now net income. It had a little bit of a dip, but again, it's been increasing pretty healthily over the last, 4 quarters. And overall, we are seeing free cash flows remaining strong and growing year over year, revenue growing healthily, long-term debt going down, and net income going up, which gives us an insight to how they're controlling their expenses. This is showing a very financially solid company. This means they can survive any storm that comes their way and sustain their growth. This is very important when looking at stocks. You've got to look at these important key metrics and more, which we're going to look at right now. So if we look at my stock fact sheet that I created, we will see that they are almost at a $1.85 trillion market cap. So with their price per earnings trailing 12 months, it's at a 27.36. Now the last 5-year PE average is 23.4. So you might think, okay, they're trading at a premium, but I'm going to talk about valuation here in a second. Price per operating cash flow trailing 12 months is at a 20.73. So again, you're paying premium for those cash flows. And the last 5 years of cash flow growth is 16.61%, very healthy. Now revenue over the trailing 12 months is 8.68%, over the last 5 years, 17.57. Good revenue growth. Maybe it slowed down over the trailing 12 months, but I really think that will pick back up and we'll see it above 9-10% this next year. Gross margins are very good at a 60.67%. This is towards the high end. I know Microsoft is in the 70% range, so even better, but 60% is something to be very happy with. Return on equity is very solid at 27.22. A lot of companies I see investors buy into are in the teens, so to be near almost 30, that's impressive. Then the debt profile. Low leverage companies are something I highly put on my priority list, and Google is awesome here. Total debt to assets, meaning the amount of debt they have compared to their total assets, is 7.81%. That is nothing. This company is one of the most lowly leveraged companies out of any that I have looked at. There's some that have none, but really this is healthy. Debt to equity is 11.18%, and they do not pay dividends. So let's talk about valuation. I want to show you this chart. It's by S&P Global, a company I hold in my portfolio, which I'll show you my portfolio at the end. But really what this shows me is valuation-wise, they're saying that they are slightly undervalued. They're on the higher end of quality, of growth stability, and financial health. So to me, this is a good picture for Google for future growth as an investment, as a company, and something I like to see. As well as if we look at their stock price target, we'll see they have currently a potential for an 11.5% upside compared to what they're currently at. So they have an average price target of $165-ish, a high of 180, a low of 141. So overall, Google is deemed undervalued. I also agree with this. I think the fact that they have such solid financials, again, if any storm comes their way, they can weather it. So not only that, I do see high potential with this company, more than a lot of other tech giant companies. The more I look at Google, the more I like this company. The main thing that has held me back from buying this company is its concentration of revenue coming from advertisement. So I want to bring this back up. You'll see that the advertising revenue comes in at $65.5 billion. Their total revenues are $86.3 billion. So advertising revenue makes up 75.1% of all revenue for Google. That's a big chunk. If something happens to that part of their business, this company would suffer massively. But with its wide moat components, as we went over, and its now possible huge deal with Apple, I think that calms my fears, as those are unlikely to be disrupted in any meaningful manner. So Google's moat is under attack, but I don't think these attacks will do much damage, as Google is likely to maintain their wide moat status with ease. But I would like to hear your opinion. Do you think any of these companies going after Google will be successful? Do you disagree that Google has a wide moat? What I want to say is I think we have an undervalued asset with massive growth potential that is financially sound. To me, it appears to be a solid investment, and I have now added it to my watch list. And if we look here at my portfolio, you'll see I do hold two other big tech companies, Microsoft and Amazon. They're both up over 70% for me. It's really keeping my portfolio on the green at 20.84%. Maybe you'll see Google there someday, but this is something I share with every single video. It's the transparency I want to provide to you. So if you have any questions, let me know. But that's all for today, and we'll see you soon on Mark Arnold's Finance.